Let's get into the first formula, which is adjusted closing capital. The purpose of this formula is that we have to find what is the closing capital and we'll compare that with the opening capital. What do we do? What do we get after comparing this closing capital with the opening capital? We come to know what is the profit we have made. So that is the purpose why we do this adjusted closing capital. So adjusted closing capital is equal to the closing capital plus drawings minus additional capital. You can ask me, how can this be additional capital be subtracted or drawing be added? Because normally what you would have done, if there is a drawing, your capital would have come down. If you added more capital, it would have added. But since we have to find the adjusted closing capital, to compare that with the opening capital, we will be doing the reverse working. So closing capital plus drawings minus additional capital. So the closing capital plus drawings minus additional capital, and if you subtract the opening capital, we will be getting the profit or loss. So this is exactly what we are going to do in this chapter, and this formula is very important. So please note down this formula for the sake of understanding all the next problems. So please note down, adjusted closing capital is equal to closing capital plus drawings minus additional capital. That leads to the next format, which is same as the formula. We are going to have the capital at the end of the year. Then we have the drawings which is getting added. Then we subtract the additional capital introduced during the year and we get the adjusted closing capital. We'll compare that with the opening capital and we'll get the profit or loss for the year. So this is exactly what you have to do in exam. That formula was for understanding. This is what is required from the exam point of view. So please remember this format. You have to write at the top statement of profit or loss for the year ended, the date, particulars, and this column will be for rupees. So please mention all these captions clearly so that you get full marks. So let's begin with the first illustration. The question over here is that the capital at the beginning of the year is 2 lakhs. And the capital at the end of the year is 3.5 lakhs. And the additional capital introduced during the year is 70 and the drawings during the year is 40. So we know that the formula, what we have arrived previously. So what we'll do, we'll fill it in this format. So the capital at the end of the year, drawings less additional capital, adjusted closing capital is what we get. From there we'll subtract the opening capital and we'll get the profit and loss. So since the question is to ascertain the profit and loss, we will do this format. Yes. So this leads to the solution. So the closing capital, as mentioned, the question is 3.5 lakhs and we add the drawings 40,000 and we subtract the additional capital 70,000 and that gives the adjusted closing capital, which is 3.2 lakhs. And from this we'll subtract the opening capital to get the profit for the year. Right? So we'll go to the next question. Read the question first. From the following particulars, ascertain the profit or loss. So it is very important that you read the question first. So the profit you have to ascertain. So capital at the beginning is 60,000. Capital at the end is 1.5 lakhs. Additional capital is 25,000. Drawings during the year is 30,000. So again, we'll put it in the same format. So we'll write statement of profit and loss for the year ended 31st March 19. What is the closing capital? 1.5. Drawings during the year 30,000. Less additional capital 25,000. Adjusted closing capital is 180 minus 25 is 1.55 lakhs. And we'll subtract the opening capital to get the profit. But here if you see, the opening capital is 1,60,000 and your adjusted closing capital is 1.55 lakhs. That means your closing capital has reduced. It has reduced means that is a loss. So you should not put it in a positive symbol. So you should say loss incurred during the year and show it as minus 5,000. Otherwise, you will not be getting full marks for this question even if you work out correctly. So there is a reduction in the closing capital, so it's a loss. So this is the difference between the previous illustration and this illustration. The next illustration is you have to find the missing figures. So if you see the question, closing capital is mentioned 1.9 lakhs, additional capital is 50,000, drawings during the year is 30,000, but the opening capital is missing. There is a question mark here, and the loss for the year is 40,000. So we should remember that we will fill the same format and we will do a reverse working. Let's do that. So we fill the format. The closing capital is 1.9 lakhs, drawings 30,000, so the total is 2,20,000. To this we will subtract the additional capital during the year, which is 50,000. So this will give the adjusted closing capital, which is 1.7 lakhs. And in the question they have given that the loss for the year is 40,000. So we will fill both of these. So what is missing over here is the opening capital. Now let me go back to the previous illustration. My adjusted closing capital was 155. My opening capital was 160. That means from my opening, my closing has gone down. That it was a loss. So what do I do here? If I add this and this, I will get the opening capital. I repeat, if I add the closing capital and the loss, I will get the opening capital. So same way, what we will do is, we will add the adjusted. Same way, what we will do is, we will find this adjusted closing capital and we will add the loss for the year, and we arrive at the opening capital, which is 2,10,000. So let's quickly get in the next illustration. Here the capital at the beginning is how much? 27,500, and the goods taken for personal use is 5,000. So he has taken, the proprietor has used these goods for his personal, and additional capital introduced is 2,500, and profit for the year is 10,000. The question over here is to calculate the capital as on 31st December. That means we have to calculate what? Closing capital. So we'll go back to the same format, and this is not known, right? This is not known. Since we do not know 35,000, okay, so this will be blank actually. So we have to do a reverse working. So first, the question they have given the profit of 10,000. They have given the opening capital, which is 27,500. That means our adjusted closing capital will be what? This plus this, which is 37,500. And our additional capital introduced during the year, we would have subtracted. So now we have to add that. Once we add that, we get how much? 40,000. And the drawings which has to be added back, we will subtract. So once we subtract 5,000, we will get 35,000. So we are going to do a reverse working to arrive at the closing capital. The format is going to remain the same. If I had done 35,000 plus 5,000, I will be getting 40,000. So to come to 35,000, what I have to do? I have to subtract 5,000 from 40,000. Next, the next illustration is illustration 5. The capital is 2,50,000. The capital, the opening capital is 2,50,000. The capital as on closing is 2,75,000. Additional capital introduced is 30,000. Profit for the year is 15,000, and drawings during the year is not known. So what we have to do is find this missing figure. So we will go back to the same format once again, and we will find out how to find the missing figure. So what is required? What is required over here? Yes, the drawings of 20,000, but we do not know this, right? So we will go with whatever information is available. So profit is there, 15,000, and opening capital is 250 given. So if we add both of this, we will get the adjusted closing capital, which is 2,65,000. And the additional capital introduced, which we have subtracted. Now we are going to add, because we are doing reverse working. So if we add that, we will be getting what? 2,95,000. And already the closing capital is given as 2,75,000. So what is the difference between 2,75,000 and 2,95,000? 20,000. So that is the drawings. So the format remains the same. We are going to only work out between these. Either you come from the top to bottom or from bottom to up. So you know what to do. Okay. Since a lot of information is available over here at the bottom, then you subtract the final figure and you get this 20,000. So the next very important part is the statement of affairs. So the format is this way. In the books of whichever company it belongs to, statement of affairs as on 31st March of that year. So you have cash in hand. On the asset side, you have cash in hand, cash in bank, debtors, bills receivable, stock, prepaid, and fixed asset. And on the liability side, you have sundry creditors, bills payable, outstanding expenses, bank overdraft, and capital. So the capital over here is the balancing figure. That is, whatever is there on the asset side and the liability side, you will be subtracting the liabilities and you arrive at the capital. This is the answer which we wanted. So this will be the balancing figure. Let's get in the next illustration. They have given the balances of Shanti as of 31st December 2018. So they have mentioned sundry creditors, stock, debtors, cash, bills receivable, bills payable, machinery, and furniture. So you have to apply yourself and transfer this to assets and liabilities. So sundry creditors is what? Liability. So we'll take it to liabilities. Stock is an asset, we'll take it to assets. Debtors is an asset, you'll take it over there. Cash is also asset, you'll take it over there. And bills receivable is an asset, we'll take it over there. Bills payable is going to be taken to liabilities. And furniture is going to be assets. Machinery is also assets. So the total of assets is how much now? 1,95,000. And on the liability side, you have 25 plus 4. So 25 plus 4, 29,000 is there. And on the credit side, you have 1,95,000. So 1,95,000 minus 29,000. That will be how much? 1,66,000. So 1,66,000 will be the capital. So this will be the balancing figure. The next illustration is also on the same format, except I will be telling you the adjustments which are different than the previous illustration. If you see over here, they have given all the particulars, and what you have to do, you have to take. But here I will point out what is the difference between the previous illustration. So if you read the question, Ganesh started the business with a capital of 75,000 and he did not maintain the proper books of accounts. So they have given the particulars: debtors, creditors, cash in bank, and bills payable, and cash, stock, bills receivable, furniture, and liability. So we will take the debtors to asset, creditors to liability, cash at bank to asset, bills payable to liabilities, cash to asset, stock to asset, bills receivable to asset, furniture to asset, land and building to asset. Now, what happens? During the year, he withdrew 15,000 for his personal use, and he introduced further capital of 20,000. So once we do transfer all these balances, we'll come to know that the capital is how much? 88,000. So the question over here was calculate the profit and loss, right? So what we identified was the closing capital balance. So to that capital balance, we will add the drawings, and then we'll subtract the additional capital which was introduced. We'll get the adjusted closing capital, and we know the opening capital they have given the question is 75 because he introduced 75,000. So the difference of that will be the profit of 8,000. This is a comparative problem, very important problem. You can go through this. Same way, illustration 8 is also they have given the opening and the closing figures over here of cash, stock, debtors, creditors, loan, business premises, and furniture. During the year, he introduced further capital of 45, withdrew 2,500 per month. Very important over here is it is per month. It is not one-time withdrawal from the business. So many students will only take 2,500 and their entire problem will be wrong. So prepare the statement of profit and loss. So same way we will find out the capital, and then finally, so see over here, we'll put the assets and liabilities and find out the balancing figure which is the capital, and from there we'll work out the statement of affairs, and you will find the capital balance over here which is the closing capital, and we'll apply this statement. So the closing capital is how much? 4,42,000 from this format, and we'll add the drawings, which is 2,500 into 12, and we'll subtract the additional capital which is introduced during the year, and that will be the adjusted closing capital. And so you'll subtract the opening capital 4 lakhs, and that will give the profit which is required, which is 27,000. The next illustration is also on similar lines. Only thing is that if you see the opening balance of the bank balance is how much? 14,000 credit, and on closing it is 18,000 debit. So we should be careful when you draft your balance sheet, okay? And based on that, you'll find out the capital. So if you see over here, we are drafting two statement of affairs, one for 31st March 17 and one for 31st March 18. So once we draft these statement of affairs, we come to know the capital balances, right? With this opening and closing capital balances, we'll prepare this format, and you'll add the drawings, you'll subtract the additional capital introduced, and you'll get the adjusted closing capital, and you will subtract the opening capital to arrive at the profit and loss during the year. So continuing our discussion, we will get into the final accounts of the incomplete records. So we have to prepare what? Total debtors account, total bills receivable account, total creditors account, and total bills payable account. So this is part of the syllabus where you need to learn the format of the debtors account. If you see the total debtors, like it was explained in the theory class already, this is the format which you need to remember. So note down the format completely. We'll get into the illustrations. In this question, they are asking you to find out what the credit sales. How do you find the credit sales? From the data which is given, you will first prepare the debtors account. Through the debtors account, you get the sales credit balance, which will be the balancing figure. So they have given the debtors opening balance. Opening balance will be which side? The debit side. Cash received from debtors by cash, right? Discount allowed by discount allowed 5,000. Sales return, again this will be on the credit side. So finally your closing balance is also given 60,000. So your balancing figure will be credit sales. So this format is very important because any of these figures might be missing in the question. But right now they have asked only for credit sales. So we are going to arrive at the credit sales. Same way the next illustration is total sales. The question is the same as the previous one, except that they have asked for total sales and not credit sales. So it is very important to read the question properly. If you see over here, they have mentioned cash sales of 1,40,000. So if you apply the same method of total debtors account, you will find that your credit sales is how much? 1,90,000, and your cash sales is how much? 1,40,000, and the total of that will be your total sales, which is 3,30,000. If you don't write this, then you will not be given any score. So you should work out the complete debtors account, then add the cash sales, and you will arrive at the total sales. Next, the format of bills receivable account. So bills receivable, again we have just been discussed in the theory class. So very quickly we will say the opening balances, cash received, the bills received honored, dishonored, closing balance, and your sundry debtors, which is received during the year. So with this we will get into the illustration. So here they are asking you to prepare the bills receivable account and compute the bills received from the debtors. So the opening and closing balance is given, cash received is given, bills receivable dishonored is given. So simply apply the format. So you have the opening and closing balance. Opening is on the debit side, closing is on the credit side. Whatever cash you receive, debtors, and the closing balance will be the balancing figure will be the debtors account, which is 75,000. So in this illustration, they have asked you to calculate the total sales. So this is a comprehensive problem. It is having both debtors as well as bills receivable. So what you have to do now, you have to prepare both the formats, the bills receivable as well as the total debtors account. So if you see over here, so we are first preparing bills receivable. We have the opening and closing balance, and then we have cash received by debtors, Okay, same thing will be 2 bills receivable dishonored this side, and then you get the total debtors. Under total debtors, you get the credit sales. So very important to get into this format so that you are able to get the credit sales figure correctly. And then finally you add the cash sales and you get the total sales of 6,90,000. So this cash sales will be mentioned where in the question itself it will be mentioned. You can see over here cash sales is 2 lakhs. Okay, so we just put the format and you get the credit sales. So I'll repeat once again. You are preparing the bills receivable account. You are preparing the bills receivable account. The opening balance, closing balance is there by cash received, and then by debtors. Same way you have 2 bills receivable which is dishonored. So this entry is going to be there, and then 2 debtors account 90,000. So the bills received account will be 90,000 over here, and then finally you get the balancing figure in the total debtors account, which is the credit sales. So you should follow this format. If you don't follow the format, you will not be able to find the credit sales. So now we will do the bank opposite of what we have learned, because this is going to be totally on creditors. So the debtors was whatever was there on the debit side will be on the credit side here. If you see over here, the opening balance will be where on the credit side, and your closing balance will be on the debit side. Same way, whatever you paid, there it was received, here it is going to be paid. Whatever bills payable accepted will be on the debit side, discount received on the debit side, and purchase return on the debit side. And all the other things like your credit purchases will be on the credit side, by bank checks dishonored will be here, and bills payable dishonored will be on the credit side. So based on that, let's quickly see the illustration. So if you see the creditors balance has been given, opening, return outwards. What is return outwards? So if you have made any purchases and you are going to send it outside, that is called return outwards. If it is inward, that means you have sold something and it is coming inside. So it will be return inwards, but this is outwards. So it's a purchase return. Then cash paid to creditors and creditors closing balance they are given. So simply we put the format over here. We have the opening balance on the credit side, closing balance on the debit side. We make whatever cash was paid 1,60,000 to the creditors, and return outwards will be on the debit side. So this balancing figure is purchase credit. Same thing if you had done debtors account, you got what? Credit sales. Now you are going to get it. Now you are getting purchase credit. Then the next format is bills payable account. So bills payable account has already been discussed in the theory class. So you will get into the illustration. So same way, the opening balance and closing balance will be available, and you are going to prepare the format over here. So you know what is the sundry creditors through this account, and then finally under the sundry creditors account you will get the credit purchases. So opening balance is there, closing balance is there, purchase return is there, bills payable is there, 2 cash paid, and this will be the credit purchases. So if you add your cash purchases and credit purchases, you will get the total purchases. So this is a comprehensive problem. So let me quickly tell you about the next 3 comprehensive problems which are very important. So illustration 16, if you go through, the question says, from the following details you are required to calculate credit sales, credit purchases by preparing the total debtors, total creditors, bills receivable and bills payable. So all the 4 ledgers you have to open, the format is there. Okay, so you have to just fill the format. So if you go through the question, that opening closing of debtors, bills receivable, creditors and bills payable is given, and then whatever cash is received, whatever discount allowed, cash paid, discount allowed by suppliers, bills receivable, bad debts, everything is available. So it's just fill in the blanks for you people. So you will start with which account first? Always you will start with bills receivable account. From there you will get the debtors account, and then finally through the debtors what will you get? You will get the credit sales. Then bills payable account you will open. You will find out what the balancing figure will be sundry creditors, and then under sundry creditors you will get what? The credit purchases. So since they have asked you only to do the prepare the bills receivable, bills payable, debtors and creditors account. So you can simply fill the format and that will be enough. Okay, we will go to the next problem. From the following details of Abdul, who maintains incomplete records, prepare the trading profit and loss account for the year ended 31st March and the balance sheet. So we have to prepare the trading profit and loss account for 31st March 18 and the balance sheet as on date. So they have given all the items of balance sheets: stock, debtors, cash, furniture, creditors, and they have given the other details: drawings, discount received, discount allowed, cash paid to the creditors, cash received from debtors, sundry expenses, and capital as on 1st April. So that is the opening capital. So as usual, we will prepare the total debtors account. We will find the credit sales, then we will find the creditors account and we will get the credit purchases, and finally in the P&L account, so we have the sales, that will be on the credit side, closing stock, so the total is 7,10,000. On the debit side will be opening stock. Always it will be opening and closing stock should be there. So opening stock is 1 lakh, purchases is 4,95,000. So what is the gross profit in this? The trading gross profit is 1,15,000. Okay. Then there are other expenses like discount allowed, sundry expenses, and you got some discount also. So that will be on the credit side. So your net profit will be 80,000. This 80,000 will be transferred to where? Capital account. So let's prepare the balance sheet. So we'll fill in whatever asset items were there: 40,000 cash, furniture, stock, and debtors, and capital was 2,35,000 which was given. This 80,000 we computed from our profit and loss, that will come over here, and we will separate the drawings of 40,000 and sundry creditors 1,75,000. So your balance sheet should tally 4,50,000. So this is a very comprehensive problem. Same way, illustration 18, Bharati does not maintain her books of accounts under the double entry system. So this itself should give you an idea that this is an incomplete records, and then you should work out accordingly. So from the following, prepare the trading profit and loss account for 31st March 19 and the balance sheet. The question is very similar to the previous one. Only thing over here is that the debtors figure is missing. That is, your closing debtors as on 31/3/19 is missing. So this we have already learnt in the previous problems, how to find out the debtors. So same way we will be preparing the debtors account and we'll find out the balancing figure, which is going to be 58,000, and we will simply apply this to our balance sheet. So we prepare the P&L account. As usual, the cash sales and credit sales, closings. We prepare the trading and profit and loss account. We have the opening stock and the closing stock, and then we have the sales, which is cash and credit sales, and purchases, wages. This will be the gross profit. This will transfer over here to gross profit by gross profit. This will transfer over here by gross profit. And on the debit side we have the other expenses, general expenses, depreciation, and the net profit is going to be 1,39,000. Where will this be transferred? To the capital account. So the capital opening balance was 2,22,000. To this we are going to add the profit. The other asset items are there. This debtors account, that's what we prepared, and we found out the closing balance is 58,000. So that is how your balance sheet will tally. The two adjustments which are very important in this problem is that depreciation. So how you calculate the depreciation of 17,000 over here, that is 10% of your value of the machinery. The machinery value is how much? 1,70,000. 10% will be the depreciation. You will subtract the depreciation in the balance sheet figure. Okay, and you will show 17,000 as under the expenses. So this is one adjustment, and finding out the debtors through the debtors account is another adjustment. Otherwise, the entire problem is same as the previous problems. Okay, that's how we come to an end to the first chapter.